Update on my GU sells. We're now within 10 minutes of Eurozone GDP growth rate. Both sells were in profit and I've closed out 90% of the positions now, just leaving the remaining 10% to target the original take profit. The reason I've done that is, you know, we kind of got down here, we stalled a little bit, we've got the news. My plan is always within 10 minutes of high impacting news to close out 90%, and what I don't want now is, having been so close to stop loss here on these two big sells, to then, you know, we get some potentially positive data and price then retraces and we're back into this consolidation. So I've closed out 90% on both sells, and that's that. GU sells, the remaining 10% of this position after I cashed out 90% has gone on to hit the final take profit. We can see if we look at EU came in and bounced off this intra level plus a couple of pips. So when that's hit, we've also hit here as well. US 500 has triggered. C grade trade for me. I've closed out for zero. It's clear that there's flows in play. We've got an intra level. US 30 is pushing down lower. If US 30 gets to this level, then we'll see where US 500 is. Then I'll look to execute. But in this scenario, this doesn't feel like a good play. So C grade trade closed out. Taken a buy on US 500. US 30 has now hit its level, and I have bought US 500. If there was flows, driver has now hit a daily level, and US 500 is at the extremity of its level, so I've taken a buy on US 500. Now that I've executed, I'm thinking back on my previous journal's findings, and that was, regardless of driver alignment, anytime we're in flows, I have a negative expectancy. So I'm inclined to say, oh, maybe this isn't a good trade at all. It's okay to execute like this if the flows are affecting GU, but when I'm in a position and flows are affecting stocks, I'm better off just to get out of the way. Stop loss has now hit on US 500. I did make a promise to myself that I wouldn't remove stop losses. I know I shouldn't really be taking a loss until US 30 is a loss, but in the past that's always bit me on the rear end. So loss on US 500. Potential error that I've seen on the US 500 trade is that by the time this hit the refinement of this daily level, is such a wide level. If I've just refined it to the 4-hour candle body closed and waited for that, that's essentially where I got stopped out. If we look at the 15-minute chart, just after I got stopped out, it's hit the 15-minute, sorry, the 4-hour refinement on US 30, and that may be the turning point. US 500 sell has hit 4-hour intra level. It feels a bit like a flow scenario. All of a sudden we're just getting a really strong push on stocks. If we'd have carried on ticking up and then hit, I would have said probably fair game, but this sharp move with US 30 also moving, I'm going to say C grade, and I've closed. That US 500 has hit what would have been the stop loss, so I made the right call by closing out for minus 4.8 pips when it triggered.